Hello, my name is Kate Sellers. I am the Vice President of Charles J. Sellers and Company. We're an insurance agency located outside of Buffalo, New York. We cover all of New York State, and our specialty is insuring physicians and their practices and their families. Today I'm going to talk to you a little bit about protecting your income in case you ever become sick or injured and can no longer earn an income. So just a couple of real basic points about disability income insurance. It's a coverage that pays you a monthly benefit if you're disabled. And it's so important because the risk of disability is very real. The statistic from the Social Security Administration is that 1 in 4 20-year-olds will be disabled before retirement. So that makes this one of your most important insurance coverages for your financial security. It's much more likely that you would be disabled than that, for example, you would die prematurely. So disability insurance in many respects is even more important than life insurance. And some questions we ask people to get them just kind of thinking about this topic and why they need to protect their income with disability income insurance. If you think about everything that your income makes possible, it makes it possible for you to repay your student loans, which we know is a big issue for many surgeons. Obviously, it helps you because it pays your rent or your mortgage. And we encourage people to think about the fact that if they were to be disabled, they wouldn't want to have to move themselves and their families. It supports you, it supports your family, it helps you to send your children to the colleges of their choice. That's the stage in life that I'm at, and anybody who's been there knows that it is not inexpensive. And of course, part of your income goes to your savings for retirement. So if you stop earning income, not only could you have trouble paying your bills now, you might have trouble paying them into your retirement years. In addition to the need for the coverage because of all the expenses that your income goes to, it's really also an asset, your ability to earn your income. And it's for most people, and certainly for most physicians and surgeons, it's the greatest asset you have. Just some simple math as an example, for someone who earns $400,000 a year and works for 30 years, that's a $12 million asset. And any other asset that if you had it and was worth that much money, you would certainly insure it. And you've made a huge investment of time and hard work, not to mention tuition, to be able to earn your income. So you want to insure it. And even more so than many other people, of course, your ability to earn an income depends on very good health. To be able to do the type of work that you do, you need to be in good health and be able to stand for long periods of time and have full use of your hands and have a lot of stamina. So your good health is very important to your ability to earn an income. A lot of times we're talking to younger surgeons about the importance of buying disability insurance. And sometimes younger people have a harder time seeing their risk of becoming disabled because they are generally in good health. But it's important to purchase disability coverage when you are young because it can become more difficult to obtain that coverage as you get older. What we certainly see as we're selling this coverage is that the vast majority of us do not get healthier as we age. And even kind of routine health issues that you might develop, like a back pain, can be things that might create an issue when you go to apply for disability insurance. You risk having certain conditions covered by your policy. They could be excluded if you have a history, or in some cases, if the health issue that crops up is serious enough, you could be declined for coverage, and you don't want to be in that position. So we strongly encourage young physicians to apply for whatever coverage they can obtain as early as they can. And then as your income increases in the future, you can add to the coverage that you buy now. You can supplement it and assess your needs as you go along. For those surgeons who might not be as young, and I'm probably in the not so young category myself, we really encourage people to review your disability coverage over the course of your career and make adjustments as necessary. You know, there are times when it's kind of super obvious that you should review your coverage if you change jobs or have a major change in your life to your family. But even just, you know, if it's been 5 or 6 years since you've looked at your coverage, it is important to at least give it a quick review and make sure that it's still what you need, given things that may have changed in your life, like increased income. We often have people ask us how much disability coverage they can have. I think sometimes there's a misconception that there's a legal limit out there, which there is not. There are guidelines set by insurance carriers on how much coverage they will provide on their own and in conjunction with other carriers, and an agent can help you assess the coverage you have, whether you have room for more coverage, and whether you should consider purchasing more coverage. And then you can supplement the coverage as you need it, because it really is important to continue to insure as much of your hard-earned income as you can. It's also important to keep in mind that typically a lot of carriers do not want to issue new coverage unless you're under age 60. Some carriers will look at an applicant who's under age 65, but at that point, it's very likely that there are some health conditions that will prevent issuance of full coverage. So that's just something to keep in mind, that there are age limits on issuing new coverage. One topic that we discuss quite frequently with our customers is how to look at coverage that's provided by an employer. That can come up early in someone's career or at a later stage, and someone needs to make a decision as to whether to keep personal coverage that they already have in effect if their employer is making a change and providing coverage. For example, if a practice is purchased by a large health system that provides coverage to its employees, a lot of our physician customers will debate whether or not to keep personal coverage that they already have in effect. And we review that with each customer, and personal circumstances can vary, but on the whole, most of our customers, once we kind of walk through the process and review the coverage that's offered, most of them will opt to maintain at least some of their own personal coverage to make sure that they are properly covered. And there are a couple of reasons for this. One issue is that the amount of disability insurance provided by an employer may not be enough. Employer coverage is called group long-term disability insurance, and the way that coverage works is that it covers a percentage of income with a monthly cap. And we have worked with quite a few customers who will remember the percentage of income but kind of forget about that monthly cap on the coverage. And when they look at it a little bit harder and look at the cap, they'll realize, and this could particularly arise for orthopedic surgeons, that there may be income above that cap that is not insured that they would like to insure. So if you keep your own coverage in place in addition to employer coverage, or if you add your own personal coverage on top of employer coverage, you have a better chance of insuring a higher percentage of your income. It's also important to note that employer-based coverage is typically not portable if you leave the position that you're in, and that's really important to know. You know, we certainly see that surgeons are changing jobs more than they used to, like most people in our society today. So if you leave your current job, you can't take the coverage you have now from your employer with you. You may be able to convert a small piece of that into an individual policy, but it's typically not the amount of coverage that you need. And if you're moving into a different position where there are not disability insurance benefits offered or not enough disability insurance benefits offered, you may be in a bit of a bind if at that point you can't qualify to purchase your own coverage because of a health condition that has arisen. But if you have your own coverage in place, that will give you more flexibility should job changes be in store for you down the road. Another important consideration when you're looking at employer-provided disability insurance are taxes, of course. So typically speaking, in an employer-based plan, if the employer is covering the cost of the premium, the benefits will be taxable. Some plans are set up so that the employees pay their own premium, and if that's the case, then typically the benefits would not be taxed. So you want to make sure you know that, whether you're set up to have your benefits taxable or not. Because if they are taxable and you're thinking you have, just for an example, $10,000 a month of coverage, if they're taxable, after taxes, that might be something more like $7,000 a month of coverage. So that's important to know when you're looking at employer-based coverage. One of the biggest issues really with employer-based coverage is that you can't control it. Your employer is controlling it. And for something as important as disability insurance for an orthopedic surgeon, I think it's important to be able to control at least some of your own coverage. We've seen situations where health systems have decided to curtail or end group coverage for some physicians. And at that point, it's been a problem for some of the physicians who, because of age or health issues, couldn't qualify for their own coverage. If you have your own coverage in place, you've always got some coverage that you have control over. So we really advocate keeping some of your own coverage in place that you control, not your employer who might be looking to cut costs at some point down the road. And then finally, the quality of the employer's disability policy is something you really need to evaluate. There are so many variations between disability policies in terms of how much coverage is provided, whether there are physician-specific provisions in the policy. So it's very important to look at the quality of the coverage provided by the employer as well. When you're looking at disability insurance, there are a lot of important considerations when evaluating a policy. One that most people are familiar with is the definition of disability. Every disability policy will contain a definition that basically says this is when we consider you to be disabled and therefore entitled to benefit payments. So that's really the key to the policy. When are you considered to be disabled and entitled to payments? So you want to look for a policy, of course, that provides coverage if you can't perform the duties of your particular specialty. That's very important. Another important part of a disability policy is whether it provides what's called residual coverage or coverage for a partial disability. I would say the majority of disability claims that we see here in our office are for total disability. It's much more common that we see that than a partial disability, but we do see claims for partial disabilities. For example, somebody develops a condition where they can still work, but can't work the grueling hours that they typically would work if working full time. So if you have partial disability coverage, that would permit you to keep working on a reduced basis and collect benefits to make up for the loss of income you would experience. And it certainly has been our experience with our physician customers that most of them would like to keep working if they can and if they're able to, and having that residual coverage permits you to do that. And in some policies, it's built into the policy. In some policies, that's an extra rider that you pay additional money for. You just want to make sure that it's included in the policy. When you're evaluating a disability insurance policy, whether your current coverage or new coverage that you're considering buying, there are several different variables or moving parts that you need to look at and make decisions about. It's a much more complicated kind of insurance than, for example, term life insurance. Um, the variables, the kind of major variables in a disability policy are the amount of benefit, the waiting or elimination period, and then the benefit payment period. And all of these things will affect the premium, depending on the choices you make for those variables. The benefit amount obviously is the monthly benefit that you're going to apply for. And then the waiting or elimination period, that's the period of time between when you first become disabled and when you would qualify for a benefit. It varies between carriers, but with some carriers, the lowest waiting period option or shortest waiting period option is 30 days. There's 60, 90, 180, and with some carriers up to 365-day waiting periods. Certainly the most common one we see people select is 90 days. And if you selected a 90-day waiting period, after 90 days of disability, you would be qualified for benefits, and then you go through the process of submitting your claim and supporting material, and then receive a check. So it's important to think about how long you would want to go without income when you're setting that waiting period. We do work with some younger physicians who opt for shorter waiting periods, 30 days or 60 days, for some or all of their coverage, because they haven't had time to build up cash reserves or a cushion to see them through that type of a longer waiting period, and then that can be adjusted down the road. And if the shorter waiting periods will increase premium as compared to a longer waiting period. Obviously, more disabilities would be covered with a shorter waiting period. For example, a disability of 90 days, you would be entitled to 2 months of benefit payment if you had a 30-day waiting period, and you would not be entitled to any benefit at all if you had a 90-day waiting period. The other big decision to make is the benefit payment period, although this is typically a fairly easy decision. Some shorter benefit payment periods may be available, like 2 years, but most people would aim to ensure their income right up through retirement age to replace all the income that would be lost if you were permanently disabled. You also want to make sure when you're purchasing coverage that it will be there when you need it, that it has what's called renewal security. There are some programs, disability insurance programs on the market where it's group coverage, and the insurer can decide to cancel the group if the performance of the group isn't going well, and you obviously would prefer to avoid that type of coverage because it could leave you without coverage if the group is canceled. So you want to make sure that the disability insurance you buy is not group cancelable if it is group insurance. The affordability of coverage is very important. It can be hard to compare different disability insurance proposals because of all this variability I've been discussing. There are so many ways that policies can be varied and customized and structured that it can make an apples to apples comparison pretty difficult. Again, if you work with a trusted agent or broker, they can help you make comparisons if you'd like to do so, to try to find the best bang for your buck when it comes to paying your disability insurance premiums. And then, as I mentioned before, we really encourage people to review your coverage every few years just to make sure that it's keeping pace with your income and that things haven't changed that you need to adjust your insurance for. In addition to the basic benefit selections that you make in putting a disability income policy in place, there are also optional riders that can be added to further customize your disability insurance protection. One of the most important ones is the cost of living adjustment rider. With that rider, the intention of it is to help your benefit keep pace with inflation. The monthly benefit that you select today, that sounds entirely adequate may not be enough in 20 years' time, in light of inflation and costs that will be increasing. So this is something that will come into play in the event of a long-term disability. And if you're on claim for a year, at the end of a year, an inflation index is consulted, and then an inflationary factor would be applied to your benefit to increase it if there was an inflationary increase. And that review is then done every year to help your benefit keep pace with inflation. It's especially important for young physicians to consider putting a cost of living adjustment rider on your coverage, because a young physician has the potential of being out of work for 20 or 30 years with a long-term disability, and in that situation where the purchasing power of the benefit purchased today is not going to be the same down the road. Another important rider to consider for a young physician is an option that will guarantee that you can increase your coverage substantially in the near term as your income increases. So the concern would be that your income will increase after you initially purchase coverage, most likely. But what if something happens to your health and you're not able to purchase more insurance to cover that increased income? This type of an option basically ensures your insurability and permits you to increase the amount of coverage you have by set percentages or amounts without regard to your health status or history at that point in time. So that's very important for young physicians to have, and most of the younger physicians we sell disability insurance to will put this on their policy. Another benefit that is also nice to consider putting on your policy is a catastrophic benefit. You don't have to be catastrophically injured to collect disability insurance. If you can't work, even if you're going to recover eventually, you may qualify for your disability payments, and we certainly see lots of customers have temporary disabilities where they're unable to work, but then they go back to work. A catastrophic benefit, though, something that might really permanently disable you and be along the lines of something that makes it so that you can't perform activities of daily living or so that you're cognitively impaired. The catastrophic benefit in those situations would bump up your monthly benefit payments in recognition of the fact that you would have additional expenses if you had that kind of catastrophic disability. Just a little bit about the underwriting process for disability insurance. This is important to understand so that you can make appropriate decisions about when to apply for disability insurance. There is a process. It's not as quick as most people would like, including people who sell disability insurance, but it's the process that the insurance company uses to evaluate the risk they're taking on. And if a physician buys a policy and goes on claim in their 30s or 40s and is going to be on claim for 20 or 30 years, there's a lot of money on the line for the insurance company. So that's why they really want to carefully evaluate the risk they're taking on. There's health underwriting, which would include always filling out an application that will ask you questions about your health history. It may also entail, and this can depend based on the amount of coverage you're applying for, your age, your health. It can also include things like the underwriters obtaining your medical records and reviewing them, you having a short physical exam with a nurse that could include blood and urine. You may be asked to answer questionnaires about health issues that you've had. I know the underwriters in our office find that with our physician applicants, asking the physicians to answer questions is very helpful, because obviously you have an excellent understanding of your own health history and can explain it better than anyone else. And then there's also financial underwriting to see how much disability coverage you can qualify for. That is based on your income and based on other coverage you have in force. And all of the insurance companies have charts where you look at those items, and it tells you how much coverage you can purchase. And then your tax returns provide the proof of that income that the insurance company is insuring. And they want to verify that they're not providing more insurance benefit to somebody than they could earn working. So the question does come up, well, what if I already have a health issue and I need disability insurance? So in many circumstances, an insurance company can kind of work with you. There are exclusion riders that can be put on policies so that the insurance company could still issue you coverage that would cover lots and lots of potential disabilities and illnesses, but might exclude something that you have a health history of. A very common one we would see, for example, would be a rider on all or part of your back. And most of the time, the people we talk to, that's not something that typically keeps them out of work or for very long at all, so it's not a huge concern. And it's certainly better to be able to get coverage that would cover so many other illnesses or accidents that might occur rather than to not have coverage at all. Occasionally, there are what's called guaranteed issue or open enrollments available with different programs. And if you have a health issue, it's very important to kind of keep your eye out for those and take advantage of them when they come along. Those typically involve an offer for a set amount of coverage without full or any health underwriting. And those might be of assistance to you if you do have a health issue. And finally, if you have a health issue that is going to preclude you from getting your own coverage, typically an employer-based group policy can provide coverage. Sometimes there's a period of time during which a pre-existing condition is not covered, but after, say, a year, it would be. So those are important things to review with an HR department if you're looking at a job offer and you know you already have a health issue that might prevent you from getting your own disability insurance. If you're thinking about applying for disability insurance or applying for more disability insurance, there are other types of insurance that it makes an awful lot of sense to consider at the same time. One of those is life insurance. Life insurance and disability insurance go hand in hand if you're thinking about protection for your family in case something happens to you. Obviously, the two things you're going to look at are disability insurance and life insurance. And if coordinated, if you're able to coordinate the application process, you may be able to get away with only having one exam, one set of lab draws done. That could be used for both the life insurance application and the disability insurance application. Those need to be coordinated since they're screening for different issues. But if it's set up in advance, typically you could have one set of labs for both coverages, and that would just make your life a little bit easier to have one less thing to schedule in your busy day. The other type of insurance that's good to look at the same time you're considering disability income insurance is disability overhead expense insurance, sometimes called business overhead expense insurance. And that's another form of disability insurance. It pays a benefit or helps reimburse your practice for expenses that are incurred while you are disabled and unable to perform surgery and generate income. With the idea being that a lot of your expenses are fixed and aren't going to go away, even if you're not able to operate. For example, your rent or your employee's salary and benefits. Those are often kind of the two biggest cost centers that we see that go on and need to be covered even when income isn't being generated. We typically would see this in a group practice so that overhead expenses are covered even if one or more of the surgeons is disabled. We know that right now expenses have been growing We're talking to our physician customers all the time, and we know that with various technology that you have to invest in and um, kind of rising staff salaries in today's environment, this insurance has really become more important than ever. Up to $50,000 a month of coverage is available, and you can apply for it at the same time you apply for the disability income insurance, and then the underwriting process is combined for the two, and that makes things a little bit easier. Thank you so much for listening to my presentation. If you have any questions or for more information, or if you'd like to review your current coverage with a licensed agent, please contact our office. My email and phone numbers are there, as well as our website. We'd be very happy to help you at any time without any cost or obligation for reviewing your coverage. Thank you.